Hi everyone, welcome back to Tax Engineer. I am Balaji Natarajan, enrolled agent, and today we are going to simplify the 2026 federal tax brackets. One of the biggest tax myths I hear is if I move into the 22% tax bracket, does that mean all of my income is taxed at 22%? The answer is no. In this video, I'll explain how tax brackets actually work, what's new for 2026, and we'll walk through a real example using a 75,000 salary so that you can understand exactly how federal tax is calculated. Let's get started. The tax rates themselves have not changed. We still have the same 7 federal tax brackets: 10%, 12%, 22%, 24%, 32%, 35%, and 37%. What changed is the income limits for each brackets. The IRS adjusts these every year for inflation. The standard deduction also increased, which means many people will pay tax on a little less of their income compared to last year. Now, let's clear up the biggest misunderstanding. Tax brackets are progressive. Think of them like filling buckets. You fill the 10% bucket first, then the 12% bucket, then the 22% bucket. Only the income that spills into the next bucket gets taxed at the higher rate. So, if you are in the 22% bracket, it does not mean your entire income is taxed at 22%. Only that portion above the previous bracket is. That's why getting a rise will never make you take home less money because of taxes. Here are the 2026 tax brackets. If you are filing single, your income moves through these brackets as it increases. If you are married filing jointly, the brackets are generally about twice as wide, giving married couples more room before moving into the higher tax rates. The most important thing to remember is this: most taxpayers are in the 10%, 12%, or 22% brackets. Very few people actually pay tax at the top rates. Before the tax brackets even apply, most people first subtract the standard deduction. For 2026, if you are single, it's 16,100. If you are married filing jointly, it's 32,200. For head of households, it's 24,150. That means you don't pay federal income tax on that portion of your income. This deduction alone can save hundreds or even thousands of dollars. Let's put everything together. Suppose you are single and earn $75,000. First, subtract the standard deduction of $16,100. That leaves $58,900 of taxable income. Now we apply the tax brackets. The first $12,400 is taxed at 10%, the next $38,000 is taxed at 12%, the remaining $8,500 is taxed at 22%. And everything together, and your total federal income tax comes to about $7,670. Notice something interesting here. Your tax bracket is 22%, but your effective tax rate, the percentage of the total income that actually goes to federal income tax, is roughly about 10%. That's why it's important to understand the difference between your marginal tax rate and your effective tax rate. One more thing, tax credits can reduce your tax bill even further. For example, the child tax credit can significantly lower the amount of tax you owe if you have qualifying children. Also, if you sell investments that you are held for more than 1 year, those gains are taxed under a separate long-term capital gain system, which is often lower than your regular income tax rates. So, here is what I want you to remember. Number 1, moving into a higher tax bracket does not mean all of your income is taxed at that higher rate. Number 2, the standard deduction reduces the income that's actually taxed. And number 3, understanding of your federal tax brackets helps you make better financial decisions. If you found this video helpful, please hit the like button and subscribe to Tax Engineer for more simple explanation on taxes, IRS updates, and tax planning. If you'd like me to calculate the taxes for a different income level or different filing status, leave it in the comments. Thanks for watching. Again, I'm Balaji Natarajan, an enrolled agent. I'll see you in the next video. Bye.